Hello and welcome to the Quality Investor. With earnings season in full swing, I've been providing commentary on various businesses and their results. This is to assess if my investment thesis remains intact if it is a stock that I hold. Last week, Apple, ticker AAPL, released their earnings. And it was a mixed report, I would say. The initial market reaction was kind of bearish, but since then, the share price has seen a bit of a bounce in the market this week. So the primary reasons for that bearish sentiment, however, was weaker than expected sales in China and an industry-wide slump in tech hardware sales. All right, let's get into the earnings. But first, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, hit that notification bell so you can know right away when I post more stock analysis content. What I was looking for in Apple's earnings last week was, is this still a business that's primed for growth in the future? So my investment thesis in Apple is simple. Point one, Apple has built an economic fortress with a mile-wide moat around the business due to the once revolutionary iPhone, which has strong pricing power and continues to set sales records. Point two, Apple possibly has the strongest brand recognition in the world and a customer base that is fiercely loyal to the Apple ecosystem. Point three, the services segment continues to be a growth engine and is a high margin business with far higher margins than hardware. Their gross profit from services is higher than the revenue from the iMac and iPad combined. And my final point is the Apple ecosystem in general is a self-contained system and creates high switching costs for users once Apple products become their base tool. All right, let's get into these earnings here. So first, we're looking at this article. Apple stock falls after cautious outlook overshadows record iPhone quarter. The company said iPhone sales increased to 43.8 billion in its fourth quarter, slightly beating expectations and marking a new record for iPhone sales in its fiscal fourth quarter. Services revenue surpassed 22 billion for the first time. So to me, this is signaling some pretty good news because the iPhone 15 was launched in the fourth quarter for Apple's fourth quarter. And initially, people had some negative sentiment surrounding that launch. However, the launch showed to be very successful, and we should see even better results as the Christmas season nears. And just to highlight the rest of the results, so we see here that revenue in general was up 89.5 versus the 89.34 expected. A slight decrease though from year over year in Q4 last year, but adjusted earnings per share $1.46 versus $1.39 expected, which is a nice jump from last year. iPhone revenue we already talked about, and the services revenue is also the primary growth driver right now for Apple. But we see here with Mac revenue, iPad revenue, and the wearables revenue that all three of them are down a little bit, and to me that's just a sign of the general slump that we're seeing right now in tech hardware as a whole. On the income statement here, we can definitely see that it's been a down year in terms of revenue for Apple. So down a lot from last year, 383 billion versus the 394 last year. However, we see this gross margin here, 169 billion. Now it is slightly down, dollar cents. However, if we look at that gross margin, we see that gross margin is up almost 1 percentage point from last year. And that services segment is really the big driver there, 70.8% gross margin there, which is a very good, strong number. And if this services segment grows and grows, these margins are only going to increase over time. And here this article points out that Apple earnings top forecast, but sales fall for fourth straight quarter on Mac and China weakness. And so we see here, so while China's sales fell 2.5% from last year's COVID hit period in the world's second largest economy to 15 billion. So on the surface, it seems like with that China news, it's a little negative. However, I do think China is in a slump right now economically. And so some people have also speculated it could be due to Huawei's increased competition to Apple. But I do think we should see a rebound in China in the coming year. And this quarter and this past year will be long forgotten by next year. So one thing that still concerns me is how is Apple going to grow in the future? I want to see at least 10% growth each year in my investments in Apple. So how are they going to drive that, and what are going to be the main products coming down the pipeline? One potential area of growth is, according to this article in TechWire Asia, can Apple drive the AR/VR headset market in the next 5 years? For starters, S&P analysts estimated there were about 39.7 million AR and VR headsets installed in consumer and commercial settings as of the end of 2022, down 1.2% from 34.2 million in 2021. The research firm also predicted that AR/VR headset shipments will increase substantially from 7.9 million in 2022 to 21.4 million in 2027, a 22.1% compound annual growth rate. And here, this chart's illustrating that potential growth through 2027 for VR headsets should be pretty strong if these even come relatively close to expectations. So Apple seems to have a knack for bringing some obscure tech products into the mainstream. They certainly did that with the iPhone a few years ago. So why is Apple, not Meta, expected to champion the AR/VR headset market? Because there has been some mixed results out there for the current headsets that are out there. So while VR headset vendors have incorporated or have said they were working on similar features announced for the Apple Vision Pro, Apple has a far stronger sales pitch because its hardware already commands a strong presence in users' daily lives. Potential customers are far more likely to trust Apple in transitioning to a new computing platform, as many users have already done just that over the past 2 decades. Continuing on here, the AR/VR market's next push into the mainstream will be spearheaded by Apple, which said it will start selling the Vision Pro in early 2024. However, Apple itself is not expected to drive substantial headset sales in 2024, as both demand and supply will be limited to its high entry pricing. Instead, Apple will likely drive substantial buzz around the market that will benefit other entrenched vendors. Apple will iterate and refine its approach to AR/VR slowly and methodically, as it does with most of its products. As key use cases become more defined, it can tweak the hardware to play on those strengths. Other features that early adopters ignore can be cut or minimized in future models to save on costs. So while there may be some caution around the VR headsets in the near term, one segment that's shown strong growth over the last few years is the services segment. Apple services revenue hits $22.3 billion, a new record, as tech giant beats Wall Street expectations on strong iPhone sales. So the services segment conforms nicely to one of my points in my investment thesis as a growth engine, and also conforms to the economic moat and their pricing power. So what we see here is the company service revenue came in nearly $1 billion over analyst forecasts of $21.35 billion. The segment includes App Store, Apple Play, and so on. But what's nice here is in August, Apple boasted that it had topped 1 billion paid subscriptions across all apps and services. Last month, Apple TV Plus hiked its monthly price to $9.99, the second increase in a year, and double the $4.99 per month price point it launched with in 2019, and also raised fees for Apple Arcade, Apple News Plus, and Apple One bundles. So that ability to increase prices and still increase the amount of customers they have is a strong indicator of a fortress of an economic moat. And lastly, this is certainly just based on rumors. We shall see if this becomes a reality, but the Apple Car expected to arrive sometime before 2030. So right now, everything around this Apple Car is pretty much rumors and speculation. So the Apple Car is still far from becoming a reality, report writes, but the vehicle is still expected to make an appearance relatively close to 2030. In the Power On newsletter from Bloomberg, Mark Gurman declares a car is still a ways out. More specifically, Apple said to not expected to ship anything until later in the decade for the project. So for me, Apple is a hold forever stock. And if this Apple Car becomes a reality, it could be yet another Apple product that revolutionizes an entire industry. So I quickly want to point out my updated valuation for Apple's stock price and assess if it's still worth buying at the current prices. And right now we see that my discounted cash flow is at $196.38. I have a dividend projection of $187.07 and an exit multiple of $220.53. Apple is still trading relatively high compared to their 5 and 10-year averages on a PE ratio basis. However, from a profitability standpoint, you can see here that they're definitely beating what they did in 5 and 10-year averages for gross margins, operating margins. And I am projecting these margins to grow about 1% each year over the next 10 years, which is what gets me to that $196.38 price here. But with that, we always want to include a margin of safety whenever we're looking at our stocks here. And I really have a strong faith in Apple, so I'm only using a 10% margin of safety. However, with that, considering our valuation average here of $200.09, That creates an acceptable buy price of $180.08, which is slightly below the current price of $182.94. So with that margin of safety baked in, it does seem like Apple right now is trading right around where they should be trading. However, I would say that if you bought some Apple stock right now, you most likely will beat the S&P 500 over the next 10 years if you just hold on to it. Now that said, I personally am going to wait a little bit. Whenever I do buy some Apple stock, I continually buy right around the dips here. So I want to see that price come down a little bit to, and even at under 180 for me is a little bit high. I want to see it come down to the low 170s, high 160s. So before we go, I do want to emphasize that this is not financial advice, and I do own a fairly large stake in Apple. But with that, thank you for watching today's video. And what do you think? I love the feedback, so please comment below with your thoughts. Also, please hit that like button. And if you found any of this info helpful, subscribe to our channel and join our community. Thank you and happy investing.